The crypto market may be approaching one of the most unpredictable and potentially dangerous moments in modern financial history. And according to many investors watching global markets right now, XRP could become one of the most closely watched digital assets connected to what some analysts and market participants are calling the next major financial black swan event. Now, before social media transforms this discussion into fear-driven panic, it is extremely important to understand what the phrase black swan event actually means, because the internet often exaggerates dramatic financial narratives in ways that create confusion instead of clarity. A black swan event is generally described as a rare, unexpected, and highly disruptive event that suddenly changes financial markets, economic systems, or global confidence in ways that most investors fail to anticipate beforehand. These events are extremely dangerous because they usually emerge from risks people underestimated, ignored, or believed were impossible. And when these events finally happen, markets often react violently. History has already shown multiple examples. The 2008 financial crisis shocked the world because most investors believed the banking system was stable right before major financial institutions started collapsing. The global pandemic disrupted economies at a scale very few people predicted beforehand. Inflation waves, banking failures, sovereign debt concerns, liquidity crises, and geopolitical tensions have repeatedly reminded investors that financial systems are far more fragile than they sometimes appear on the surface. And now, many analysts believe the world could once again be entering a dangerous period of economic uncertainty and structural instability. That is exactly why conversations surrounding alternative financial infrastructure, blockchain technology, tokenized finance, and digital assets are becoming increasingly intense across global markets. Supporters of XRP believe the asset may potentially benefit during periods of financial stress because Ripple spent years positioning itself around payment modernization, liquidity efficiency, and institutional financial infrastructure. However, before anyone assumes XRP is guaranteed to skyrocket overnight during a future crisis, it is critically important to remain realistic and separate speculation from confirmed reality. No one knows exactly what the next black swan event could be. No one knows precisely when it might happen, and no one can predict with certainty how global markets would respond. However, what cannot be denied is that the global financial system is currently facing enormous pressure from multiple directions simultaneously. Governments around the world are struggling with historically high debt levels. Central banks are trapped between inflation concerns and economic slowdown risks. Banks are facing growing pressure from digital competition and changing consumer expectations. Global liquidity conditions continue shifting rapidly. Commercial real estate concerns remain elevated in several economies, and geopolitical tensions continue increasing uncertainty across international markets. These overlapping pressures are creating an environment where investors increasingly worry about systemic instability. Whenever uncertainty begins rising inside financial systems, markets naturally start searching for alternative technologies and infrastructure capable of improving resilience, efficiency, and flexibility. This is one major reason blockchain technology continues attracting institutional attention despite volatility across crypto markets. Traditional financial infrastructure still relies heavily on systems originally built decades ago. Cross-border settlements remain relatively slow compared to modern digital expectations. Liquidity often becomes trapped across multiple jurisdictions. Settlement delays create operational inefficiencies for businesses, institutions, and payment providers worldwide. Ripple entered the market specifically attempting to address those inefficiencies. Instead of focusing entirely on speculative hype cycles like many crypto projects, Ripple built its long-term strategy around institutional utility and enterprise-level financial infrastructure. The company consistently promoted XRP as a digital asset capable of improving international settlements while reducing friction inside global payment systems. Supporters believe this utility-focused approach could become increasingly valuable if the world experiences another major financial disruption. Why? Because financial crises often accelerate technological transformation. When existing systems become stressed, institutions begin aggressively searching for alternatives capable of improving speed, transparency, liquidity management, and operational efficiency. This pattern has repeated itself throughout history. Economic pressure frequently forces industries to modernize faster than they otherwise would under normal conditions. And many XRP supporters believe blockchain infrastructure could potentially benefit from exactly that kind of environment. One major concern currently worrying investors is the enormous amount of debt accumulated across governments, corporations, and financial systems globally. Debt levels in many major economies have reached historic highs. Governments continue borrowing heavily. Interest payments are rising rapidly. Economic growth remains uncertain in several regions. And central banks face increasingly difficult decisions regarding monetary policy. If rates remain elevated too long, economic activity may weaken significantly. If rates are reduced too quickly, inflation risks may return aggressively. This balancing act creates enormous pressure across financial systems. Some analysts believe this environment increases the possibility of unexpected financial shocks. Again, nobody knows exactly what form a future crisis might take. It could involve banking instability. It could involve sovereign debt concerns. It could involve liquidity shortages inside financial markets. It could involve currency volatility. It could involve geopolitical escalation. Or it could involve risks markets are barely discussing right now. That unpredictability is exactly why black swan events are so dangerous. They often emerge from vulnerabilities most investors underestimated or ignored completely. Another major factor increasing market anxiety is the rapid technological transformation currently happening across global finance itself. The financial world is evolving faster than many institutions expected. Stablecoins are expanding rapidly. Tokenization has become a serious institutional discussion. Central banks are researching digital currencies. Payment companies are investing heavily into blockchain infrastructure. Governments are debating crypto regulation. Asset managers are exploring tokenized financial products. Banks are experimenting with digital settlement systems. This transition toward digital finance is creating enormous opportunities, but also significant uncertainty. Whenever major technological shifts occur inside critical systems like global finance, instability often emerges during transition periods. Some institutions adapt successfully. Others struggle to survive. Some technologies become dominant. Others disappear entirely. This is why many XRP supporters believe the next decade could become one of the most important periods in financial history. They argue that Ripple spent years preparing for a future where liquidity efficiency, interoperability, and digital settlement infrastructure become increasingly important across global markets. Critics, however, continue raising important objections. Some analysts believe governments and major financial institutions will ultimately prefer centralized digital systems rather than relying on publicly traded blockchain assets. Others argue that stablecoins or entirely different blockchain networks could dominate digital finance instead of XRP. Competition across financial technology is becoming extremely intense, and regulatory uncertainty still exists in many regions. These concerns should not be ignored. No outcome is guaranteed. However, what makes XRP unique in the eyes of supporters is Ripple's long-standing institutional strategy. The company consistently focused on enterprise-level partnerships, payment providers, and financial infrastructure rather than relying entirely on retail speculation. That positioning continues fueling optimism whenever conversations surrounding financial modernization intensify. Another major issue worrying investors globally right now is declining confidence inside traditional systems. Trust is one of the foundations of financial stability. When people trust banks, governments, currencies, and markets, systems generally remain stable. But when confidence weakens, volatility can spread extremely fast. History has shown repeatedly that financial panic can escalate quickly once trust begins deteriorating. Bank runs can happen suddenly. Liquidity can disappear rapidly. Asset prices can collapse unexpectedly. And governments often struggle to restore confidence once fear spreads throughout markets. This is one reason many investors continue exploring decentralized technologies and alternative financial infrastructure. They want systems capable of operating faster, more transparently, and with fewer layers of inefficiency. Blockchain technology entered global discussions partly because it offered a fundamentally different framework for transferring and verifying value digitally. Ripple approached this concept differently than many crypto projects by focusing specifically on institutional liquidity and payment efficiency. Supporters believe this gives XRP long-term relevance if global finance continues modernizing under economic pressure. Another major trend influencing market discussions is tokenization. Tokenization refers to representing real-world assets digitally on blockchain networks. This could eventually include currencies, stocks, bonds, commodities, real estate, and many other financial instruments. If tokenization expands significantly across global markets, systems capable of moving liquidity efficiently between different digital ecosystems could become increasingly valuable. Ripple supporters believe XRP could potentially help facilitate that kind of interoperability. Again, these remain future possibilities rather than guaranteed outcomes. However, institutional conversations surrounding tokenization are becoming more serious every year. Large financial firms are investing heavily into blockchain research. Governments are studying digital settlement systems aggressively, and payment modernization has become a strategic priority globally. This broader transformation is why many XRP investors believe the asset could potentially benefit if the next major financial disruption accelerates demand for faster and more efficient financial infrastructure. Still, investors should remain cautious. Black swan events are dangerous precisely because they create extreme uncertainty. Markets can become highly volatile. Liquidity conditions can tighten rapidly. Fear can spread aggressively. And speculative assets can experience major swings in both directions. No investment is risk-free. No outcome is guaranteed. However, one thing is becoming increasingly difficult to ignore. The global financial system is entering a period of rapid technological transformation at the exact same time economic uncertainty continues increasing worldwide. And whenever systems face pressure during periods of structural transition, opportunities and risks both tend to expand dramatically. That is exactly why XRP continues remaining one of the most closely watched digital assets whenever conversations surrounding the future of finance, payment modernization, liquidity infrastructure, tokenization, and global economic instability begin dominating market discussions across the world. As fears surrounding global financial instability continue increasing across international markets, many investors are beginning to ask a much bigger question that goes far beyond ordinary crypto price predictions and short-term trading cycles. What happens if the current financial system experiences a serious structural shock at the exact same moment the world is transitioning toward digital finance, blockchain infrastructure, and tokenized payment systems? That question alone is one of the biggest reasons XRP continues attracting attention whenever conversations surrounding liquidity crises, banking instability, payment modernization, institutional blockchain adoption, and financial system transformation begin dominating market discussions. Because according to many XRP supporters, the real long-term opportunity for blockchain infrastructure may not emerge during calm and stable market conditions. It may emerge during periods when traditional financial systems begin showing weakness under pressure. Now, once again, it is extremely important to separate realistic analysis from internet hype, because social media has a habit of turning complex financial discussions into unrealistic overnight riches fantasies. No one knows exactly what the next global financial disruption could look like. No one knows how severe it may become. And no one can predict with certainty which technologies, companies, or digital assets would benefit if instability spreads through the global economy. However, one thing that many institutional analysts increasingly agree on is that the current financial environment appears more fragile and structurally stressed than many investors realize. Debt levels across governments continue rising at historic rates. Central banks remain trapped between inflation concerns and recession fears. Interest rate policy has become increasingly difficult to manage. Banking systems face growing competition from financial technology innovation. Commercial real estate concerns continue affecting institutional balance sheets. Global liquidity conditions remain unstable. Geopolitical tensions continue influencing capital flows and investor confidence. And economic uncertainty continues expanding across multiple major economies simultaneously. Individually, none of these issues guarantee a future black swan event, but collectively, they create an environment where systemic risk becomes harder to ignore. One of the biggest vulnerabilities inside the traditional financial system is that much of the infrastructure still operating globally was designed decades ago for a completely different economic world. Despite major advances in communication technology, digital commerce, artificial intelligence, and cloud computing, many financial settlement systems still rely heavily on fragmented networks filled with intermediaries, delays, compliance bottlenecks, and operational inefficiencies. International payments often require several intermediary banks. Cross-border settlements may still take multiple business days. Liquidity becomes trapped across separate jurisdictions. Currency conversion processes create additional friction and costs. And businesses operating globally often face delays that reduce operational efficiency and cash flow flexibility. Ripple entered the financial technology space, specifically targeting these inefficiencies. Rather than focusing entirely on speculative trading hype, like many crypto projects, Ripple spent years promoting blockchain-based solutions for enterprise payments, liquidity optimization, and institutional settlement systems. Supporters believe this institutional-first strategy could become increasingly important if global market experience another period of severe financial instability. Why? Because during crises, institutions do not only focus on survival, they aggressively search for efficiency. Financial pressure forces industries to modernize faster. Systems capable of reducing costs, increasing settlement speed, improving liquidity access, and lowering operational complexities suddenly become far more valuable during difficult economic conditions. This is one major reason XRP investors closely monitor developments involving banks, payment providers, central bank digital currency research, tokenization infrastructure, and blockchain regulation. Another critical issue influencing financial markets right now is confidence in traditional banking systems themselves. Trust is one of the core foundations supporting global finance. Most banking systems operate smoothly because people believe their money is secure, transactions will process correctly, and institutions remain financially stable. But once confidence begins weakening, instability can spread very quickly. History has repeatedly demonstrated this reality. Bank runs can happen unexpectedly. Liquidity can disappear rapidly. Credit markets can freeze. Asset prices can collapse suddenly. And panic can spread faster than regulators are able to respond effectively. Recent banking concerns already reminded investors how fragile confidence can become under stress. Several financial institutions experienced significant pressure in surprisingly short periods of time once liquidity concerns and fear started spreading through markets. This matters because confidence itself is one of the strongest forces inside global financial systems. If trust weakens significantly, volatility increases dramatically. This is part of the reason decentralized technologies and blockchain infrastructure continue attracting institutional interest despite crypto market uncertainty. Supporters argue that blockchain-based systems can improve transparency, settlement speed, operational resilience, and liquidity movement compared to some legacy infrastructure currently dominating global finance. Ripple supporters specifically believe XRP could become increasingly relevant if institutions begin aggressively searching for more efficient liquidity solutions during periods of market stress. However, critics continue challenging these assumptions. Some analysts believe governments and large financial institutions will ultimately build centralized digital systems rather than relying on publicly traded blockchain assets like XRP. Others argue that stablecoins issued by regulated institutions may dominate digital payments instead of alternative blockchain settlement assets. Some critics also question whether blockchain infrastructure can truly scale globally while satisfying regulatory compliance and security requirements across different jurisdictions. These concerns are legitimate and important to acknowledge. Competition inside the digital finance sector is becoming extremely intense. Governments, banks, payment providers, fintech companies, stablecoin issuers, blockchain developers, and asset managers are all racing to shape the future structure of global financial infrastructure. No clear winner has officially emerged. Still, XRP remains one of the most discussed assets in these conversations because Ripple focused early on institutional liquidity systems and cross-border settlements rather than purely speculative market narratives. Another major trend driving increased attention toward XRP is the rapid growth of tokenization discussions across institutional finance. Tokenization refers to the process of digitally representing real-world assets on blockchain networks. These assets could eventually include currencies, equities, bonds, commodities, real estate, and other forms of financial value. Many institutional analysts believe tokenization could fundamentally transform financial markets over the next decade by improving settlement speed, increasing transparency, reducing operational costs, and enabling programmable financial systems. If tokenization expands significantly, systems capable of efficiently moving liquidity between different digital ecosystems may become increasingly important. Ripple supporters believe XRP could potentially play a role in facilitating interoperability and liquidity movement within these future financial systems. Again, this remains speculative future analysis rather than confirmed institutional adoption. But institutional interest surrounding tokenization continues accelerating rapidly. Major financial firms are investing heavily into blockchain infrastructure research. Governments are actively developing digital asset regulatory frameworks. Payment providers are modernizing settlement systems. Asset managers are exploring tokenized investment products. And central banks are researching digital currency systems at unprecedented levels. This broader transition toward digital finance continues advancing regardless of short-term volatility across crypto markets. One thing many investors underestimate is that financial revolutions often develop slowly at first before accelerating suddenly. The internet followed a similar pattern. Initially, many people dismissed it. Then, businesses gradually experimented with adoption, and eventually it transformed nearly every major industry globally. Some XRP supporters believe blockchain technology may follow a similar long-term adoption curve inside financial systems, not necessarily replacing everything overnight, but gradually integrating into institutions over time until digital settlement infrastructure becomes standard across global finance. This possibility becomes even more important during periods of economic instability because crises historically accelerate adoption of new technologies and systems. Governments begin searching for efficiency improvements. Institutions prioritize operational cost reduction. Consumers demand faster services. And outdated infrastructure comes under increasing pressure. This is exactly why many XRP investors continue monitoring macroeconomic developments very closely. They are not only watching crypto prices, they are watching the broader global financial system itself. They are monitoring debt markets, banking stability, liquidity conditions, central bank policy decisions, payment modernization initiatives, regulatory developments, tokenization infrastructure, and institutional blockchain adoption trends. Because many believe the future value of XRP depends far more on structural transformation within global finance than short-term retail trading cycles. Still, caution remains absolutely essential. Black swan events are dangerous specifically because they create uncertainty, instability, and unpredictability at scales markets struggle to manage. Markets can collapse unexpectedly. Liquidity can vanish rapidly. Fear can dominate investor psychology. And even fundamentally strong assets can experience severe volatility during panic conditions. No investment is guaranteed to benefit during financial crises. And no one should assume any single technology or digital asset will automatically succeed if instability spreads through markets. However, one reality is becoming increasingly difficult for investors to ignore. The global financial system is currently undergoing rapid technological transformation at the exact same time economic uncertainty continues rising worldwide. And historically, periods where structural technological transition overlaps with economic instability often become some of the most important turning points in financial history. That is precisely why XRP remains one of the most closely watched digital assets whenever conversations surrounding the future of finance, banking modernization, liquidity systems, tokenization, institutional blockchain infrastructure, and potential black swan events begin dominating global market discussions.